So if you could just give us a sense in terms of what led to this whopping 40% growth that you've seen, how much of it was aided because of a low base, same time last year was the lockdown, and how much of it is sustainable in terms of a growth rate going forward, considering that we are seeing a lot of pent-up demand.
Good morning. Thanks for having me. Regarding the growth, I would say predominantly after the COVID, we are addressing the global automotive market, and the market have started reviving across the globe, and that led to the pent-up demand. And second one is we have diversified our portfolio from a TAM ETC segment to other applications for the TAM automotive actuator motors, which has led to our growth, and this has given us more penetration in number of motors getting penetrated into the car more, and this gives us a good demand for our product, ma'am. And we look at current year, we look at growth rate despite the first quarter being hit by COVID, and also we have the supply chain and availability of containers for exports. But still, we see a 15 to 17% growth during the current year. And we also see the domestic growth with the government giving BS6 norms. We see a good growth potential in the domestic market as well. So last year we did a good growth in domestic market, and this is going to build up also this year.
Okay. Just wanted to get more granular then. Revenue growth of around 15 to 17% is what you're estimating in this fiscal. But if you could break up what kind of demand you are seeing in the export market at this point. What is your order book at this point? How much are you incrementally expecting in terms of an order book? And if you had to talk about your domestic market, where you alluded to BS6 becoming an opportunity for you all, how much growth rate are you expecting in the domestic market? So what is exports looking like, order book, as well as growth rate expected in the domestic?
See, for us, generally the exports has always been close to 80 to 90% would be my export, and the rest would be in terms of domestic. But with the launch of the torque actuation, automotive actuation motors in the domestic market, we came from a 5% growth rate to 0% growth rate to 8% last year. And current year, we see this growth going up to 12 to 13% in the domestic market. And we have also diversified our portfolio from automotive segment to a brushless DC motor, which is an energy efficiency motors, towards the appliance segment. And we have tied up with the market leader, and we have already populated around 200,000 ceiling fans, which has BLDC motors, which are energy efficient. And with the government push regulation coming in February 22, we see a good potential robust growth coming out in the coming years.
Mr. Chandrasekaran, thanks so much for speaking to us. I've been trying to reach you a couple of times, but happy to speak to you on live television itself. You're sounding reasonably optimistic about the way ahead. Now, you touched upon brushless DC motors. That's the big opportunity that the markets as well were quite excited about. And I went through your annual report, and you got an order from the leader, as you put it, Crompton Consumer, Electricals for fans. Tell us, what is the split currently between autos as well as the non-auto business? Because the non-auto business, going by what you say, seems like a big opportunity. And how is that mix likely to change maybe in the next 2 to 3 years?
See, last year we just entered into the BLDC segment. We had 5% of our revenue coming from BLDC segment. We expect the BLDC segment to grow 1/3 of our revenue. This is primarily coming out of the various development application products which we are going to launch in the coming years, and also through to government push on the energy efficient schemes, which the government is going to launch in February 22. And if there is going to be a mass adoption scheme where the current induction motors are going to be converted to BLDC motors in all the ceiling fans. So this would give us a very good growth potential, and we look for this opportunity in order to scale up our growth model for the domestic market as well as for our diversified portfolio.
Interesting. Induction motors to BLDC motors, that's where the trigger is, and you're expecting it to go to around 1/3 of your revenues. Just going by the rough math, that means that your non-auto business, the BL DC motors will contribute nearly around 200 crores odd. By when?
We expect around about 300 crores by FY24, and we have the automotive business, the actuator business for both the powertrain as well as the body system to take the rest would grow by a CAGR of around 15 to 20% is what we see today. So we are looking at at least doubling our turnover in another 3 or 4 years time frame.
Okay. All right. What about commodity prices rising? We've seen a huge rise which has taken place across the commodity cycle, but you've managed to improve your margins by, I think, around 600 basis points year on year in Q4. What are you anticipating in the rest of the coming quarters, and have you managed to take a price hike? Is it necessary?
See, our commodity has always been a pass-through mechanism which we practice since FY89. So that way we don't see any impact on commodity. Might be there would be an impact at the quarterly basis because of the pricing windows, what we would have mechanism windows that we would have adopted with various customers. Some customers are on quarterly mechanism, some are on half-yearly mechanism. So that would mostly depends on what the window period would be. And overall, if you look at it on an annual basis, I don't see any impact on commodity on our revenues.
Okay. All right. So that's on your revenues as well as in terms of your margins. But, just a quick last question from my end, then I'll toss it over to Nigel. If you could just expand a little bit in terms of what your current capacity utilization is in terms of your factories. If you are talking specifically about the auto as well as the non-auto segment, what is capacity utilization looking like right now?
Our capacity utilization in the auto segment is close to 52% right now. And normally, we would go up to 70%, and we have a good headroom for us to take up capacities. That way, this would help us in our growth for the coming years. And as far as the BLDC motor segment is concerned, we have kept a capacity of close to 2 million, and we have just started the unit, and we don't see any great investment coming forward in the coming years.
So for you to go from around that 530 crores that you did last year to around more than 1,050, 1,100 crores in the next 3 to 4 years, there will not be any big capex that will be required. Just going by to
we don't see much of a big capex except the maintenance capex, and so there will be some specific products where you need to invest on the line. Would be more like there would be a little investment would be there. Other than that, we don't see a major capex coming through.
So you were not sounding very worried about the rise in commodity prices. Last year you did around, roughly in the range of 14 to 16% of margins. You'll be able to do that this year as well?
See, our margins would be in the range of between 16 and 17% is a normal margin that we make. And last year it was more of a case where we had a COVID impact of first quarter, and we had to do the 9 months revenue and 12 months absorption in cost, which led to 14% margin. But I generally see 16% margin should be something achievable by us. Okay,
all right. And also there's another buzz on the street is, do you have any kind of exposure to EVs, that's electric vehicles? Do you do any kind of business for Tesla as well as of now, since that's the biggest EV player that everyone talks about?
That is part of the global program, which I would not like to comment about. But what I would say, as from the India platform per se, is we have already launched a platform for EV for two-wheeler and three-wheeler, and it is right now in the design desk. And we are also looking for a good, exploring strategic alliances to step up our engagement in the EVs, and we expect something to be fruitful by FY23 or 24 once our products and validations are ready over.
It's been good speaking to you, Mr. Chandrasekaran. Thanks so much for joining in and giving us that outlook. So the broad, headlines that you've given us is that for this year, you're looking at growing by 15 to around 17%, margins at around 16%. But more importantly, if demand comes out, then you believe that, in fact, the company can double your revenues in the next couple of years without too much of capex. And as you said, the non-auto part of the business, that's the BLDC motors that are used in fans and other components, that's where the big driver could come into as well, while having surplus capacity in the auto segment.